Hello and welcome to another European market recap. Taking a look at where we're currently standing in the European cash equity markets, we're seeing relatively mixed, with the CAC and the DAX slipping into negative territory, whereas the FTSE and the Euro stocks are managing to cling on to some gains at the midpoint of the session today. In terms of sector breakdown, the best performer today is seen as the defensive healthcare stocks, and as for financials, they're seen in modest positive territory, up around 0.2%. In terms of data releases, we had Eurozone industrial production for April, not quite as bad as expected, coming in at minus 0.8%, where the consensus expectation was for a minus 1.2% reading. The markets did remain relatively unreactive to this, as the focus does remain on the macroeconomic concerns. We did see some analysis earlier saying that Germany's credit worthiness has been somewhat deteriorated by the continued bailout of the European periphery. As such, we have seen a notable underperformance in the German Bund, which has been seen as much as 100 ticks lower on the session so far today. As such, the 10-year government bond yield spreads between the German Bund and the periphery, including the Italian and Spanish bonds, have seen significant tightening throughout the session so far. As such, the euro is seen as supported and euro-dollar is in positive territory as we move into the US session. Taking a look ahead, we have US advanced retail sales, that's due for release later today, as well as the German Parliament, who are set to discuss the ESM, the EU Fiscal Pact, and a proposed financial transaction tax. We'll bring you anything regarding those as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Have a great rest of the day.